Okay, so I think we have a full agenda, so let's kick off, and obviously people can join as we're going along as well. So I'm delighted to welcome you to this panel session, bringing together experts from Asia and the Middle East to share their insights on green finance developments, trends, and what they mean for capital markets and private wealth. In a moment, I will ask the panelists to introduce themselves, and then we can move on to the substance of the debate. Hopefully we'll have time for Q&A. You can use the chat box to put in your questions, and we will pick those up. So let me just set the scene a little bit. We're delighted for this collaboration between Dubai and Hong Kong, two cities and two hubs that are similar in many ways. Firstly and then foremostly as complementary hubs for finance and trade, linking their respective regions to the wider global economy. And those linkages are strong, right? So I think you know, the UAE is 16th largest trading partner for Hong Kong. From a regulatory perspective, the DFSA, the regulator in the DIFC, has MOUs with the HKMA and the Securities and Futures Commission in Hong Kong. And indeed, one of the former CEOs of the DFSA was a senior advisor at the SFC. So just a few words on the Dubai International Financial Center as well. I mean, it's the largest, deepest financial innovation hub in the Miaza region. It has a common law framework, again, aligned with Hong Kong, and financial regulations in line with international standards. So over the last 17 years, it's grown to be, you know, 30,000 people strong, 3,000 companies, and a balance sheet of $1 trillion. But also at the same time, it's very much acted as the agent for change throughout the region, bringing international standards to bear across a number of finance-related areas, such as insolvency, netting, IP, and data privacy. So we're now, the DIFC is now a leading proponent of sustainability in finance, as we participate in a number of initiatives in Dubai and the UAE, and you know, you'll hear some more about those as we go through the panel. You know, really looking to promote best practice in sustainability in relation to investing and issuance. But we're also very keen to learn from other jurisdictions, and of course Hong Kong is one of the global benchmarks we look to. Now, it's undeniable that there is momentum behind green finance as part of the wider ESG initiative. EY, in a recent white paper, identified ESG as one of the top 6 priorities for company boards. We're seeing the market growing globally, over 200% in the last decade to almost $23 trillion. And green finance bond issuance has now surpassed $1 trillion. So Hong Kong and Dubai as global financial centers are perfectly placed to shape and support initiatives in the respective regions. And I think the key aim of this panel is to share experiences and perspectives on those developments and how capital markets and private investors are responding. So now that's enough for me. I will now ask our panelists to briefly introduce themselves so that we can then kick things off. If I can ask Stephen to introduce yourself, that would be great.
Sure, I'm Stephen. I'm the Vice President and Policy Research Dissemination Working Group, co-chair of the Hong Kong Green Finance Association, which is one of the sort of the leading advocate and as an industry group for green finance. And my day job is, you know, I run a policy think tank in Hong Kong called our Hong Kong Foundation as the Executive Director of the Public Policy Institute.
Thank you very much, Stephen. If I can now ask Jay to introduce himself.
Sure, I'm delighted to introduce myself. Yep. My name is Jay Lee, a financial markets partner based in Hong Kong office of Simmons Simmons. I practice the capital markets and financial markets and also general financial institutions practices as well. And I am sort of heavily involved in sort of development of green and ESG financing areas in Asia for our firm. Thank you. And hopefully we'll have a good session to everyone. Thank you.
Thank you, Jay. And Nancy, over to you.
Thanks, Ali. Hi, everyone. It's a pleasure to join this session today. I am a director at ANZ in the Sustainable Finance International team, where we work together with other parts of the bank to originate and structure sustainable finance solutions. So that's bonds, loans, trade finance, derivatives, all across the bank. I am also happy to say that in the Hong Kong Green Finance Association, together with Stephen, I'm on the banking working group, and it's been a very collaborative and learning process so far. Thanks,
Excellent.
Ali.
Thank you very much, Nancy. And last but not least, Lee.
Ali. Thanks, Ali. So I'm the capital markets partner for Simmons Simmons in the Middle East. I've been in the region for 14 years and advise a broad spectrum of issuers, sovereigns, quasi-sovereigns, financial institutions, and corporates on their capital markets related activities.
Thank you very much, Lee. So just turning to our sort of first topic area that we'd like to cover, Dubai and Hong Kong, there are various ways of financial centers working together. One of the main ways of collaborating, I guess, is sharing experiences and best practice. So if I can ask Stephen to kick off, I mean, what do you see as the key policies in Hong Kong that have encouraged the development of green financing?
Yeah, I think first is a blueprint and coordination among regulators. And so in Hong Kong, there's a cross-agency steering group that is set up by Hong Kong Monetary Authority, which is regulating the banks, as well as these SFC Security Commission, which basically regulate the market, capital market. So with this cross-agency steering group, that they be able to actually formulate a strategic plan. So that is coordinated by the SFC, the Hong Kong MA, as well as including obviously the other bureaus within the government. So there are a couple of programs that is noted. For example, the government commits to issue a green bond program themselves. So for example, there was a total of $3.5 billion of green bond issued by the government, and another round of offering this year of $2.5 billion of green bond this year. So it's obviously a government-led issuance program. And second, that I know Jay will cover more, is the Green and Sustainable Finance Grant Scheme, basically a subsidies for bond issuers. And lastly, in Hong Kong, we aside from finance, we also pull in what we call a quality assurance agency, which traditionally they are not a player in assurance finance certification, but in this area, because of green finance, they have some expertise in sustainability assessment. So it was put in and asked them to give a green and sustainable finance certification scheme, basically to certify and give market confidence in certain structured finance projects. So it's capital market regulators, as a government, is also, aside from the non-traditional players that are pulled to basically promote the overall green finance and green capital market as well.
Very good. Thank you very much, Stephen. Jay, do you want to pick up the points around the Green and Sustainable Finance Grant Scheme? Can you just elaborate a little bit more about its features and how it operates?
Sure, yeah, definitely. I mean, Stephen correctly mentioned that, the Hong Kong government itself has been trying to issue their own green bonds, which was very helpful to the market itself. But also, as Stephen briefly mentioned, the government itself announced a green and sustainable finance subsidy scheme called Green and Sustainable Finance Grant Scheme in May 2021. This is supposed to last for 3 years from this year. The goal of GSF scheme is to provide a subsidy for eligible bond issuers and also loan borrowers as well to cover the expenses on bond issuance and also loan borrowings as well, plus external review services for green and sustainable financings. It covers 2 tracks, for example. Number one, it covers general bond issuance cost, for example, arrangement for arrangers, but legal for lawyers like us, and audit fees for the auditors as well, but also it covers the listing fees. And also they cover external review cost that the borrowers of bonds and also loans need to spend on engaging second opinion providers in it includes pre-issuance external review, includes post-issuance external review, as well as reporting cost as well. And bond issuance cost that can be covered up to half of the eligible expenses, for example. However, there's a cap of 2.5 million Hong Kong dollar when there's a rating by the issuer or its guarantor. But if there's no such rating by the guarantor or the issuer, then up to 1.25 million Hong Kong dollar of eligible expenses. But in the case of external review cost, they can be covered, the amount that they can cover is up to full cost. However, paid to recognized external reviewers, but also it has a cap too, cap of 800,000 Hong Kong dollar per bond or loan. And so as an additional note, Singapore is competing with obviously Hong Kong. So they announced its own similar scheme called the Sustainable Bond Grant Scheme in Singapore as well. Both have similar conditions and features, but key difference is Hong Kong scheme has a bigger amounts. So bigger amounts subsidy given to issuers for each transaction. But also Singapore scheme has allowed the multiple transactions. However, Hong Kong scheme has allowed only 2 transactions if you want to issue bonds. So that's the sort of general overview of Hong Kong Green and Sustainable Finance Scheme and how it works. Thank you.
Thank you very much, Jay. Lee, if I can bring you in at this point, to give the Middle East perspective. I mean, what are you seeing in terms of green finance transactions in the Middle East? And what initiatives have you picked up that Dubai and DIFC have been pushing in terms of support for green finance?
Yeah, thank you, Ali. I think slowly but surely we are starting to see green finance transactions make their way into the Middle East. I mean, even if you just look for the last year, we had ISDB issue 1.5 billion to fund COVID projects. We had Saudi Electricity Company issuing the first green to cook out of Saudi. QNB issuing the first green bond for a financial institution out of Qatar. Egypt do a sovereign bond, to name but a few. So we are definitely seeing the kind of start or the movement towards the green finance initiative. It's not any real surprise given that the GCC has huge sustainability goals. Countries are looking to reduce dependency on oil and respond to the growing demand for action on climate change. So if you look at the individual countries in the Middle East, the UAE in their strategy 2050 has announced, huge cuts to carbon dioxide in power generation, increases in the amount of green finance. It's also renewable energies are going to contribute to overall total power. The same, sustainability plays a big part in Saudi Vision 2030, and then Oman, Qatar, Bahrain, Kuwait, also making kind of very positive steps in their national development plans for sustainability projects. And look, these projects are very capital intensive. I think even just the UAE strategy alone is going to require 160 billion over the next 30 years. So that there's a huge amount of financing to be done. So it's no surprise that a lot of market participants in the Middle East are working towards and laying the foundations to allow these issuances to take place as seamlessly as possible. So going back to the DIFC and Dubai, DFSA has introduced its best bonds, practice guides. The DFM has introduced, reporting guidelines for voluntary sustainable disclosures, Sharia standards for reference to green sukuk. You've got a whole load of market participants, Nasdaq Dubai, DIFC, DFM, SCB, HSBC, DP World, Emirates MBD, all coming together to form the Dubai Sustainable Working Group with intention of really working together and collaborating to drive Dubai and the UAE as a hub for green finance, and that's happening across the region. Just earlier this week, we saw Oman release draft guidelines for green bonds and sukuk, intended to amplify their efforts to reduce hydrocarbon dependency and diversify funding sources. So I think these initiatives, together with some of the initiatives that we're seeing on the global scene, an update to the green bond principles was published last month, really support the expansion of green financing options, provide more clarity on offering of these instruments, and hopefully allow more investors to tap into the asset. I mean, they're not in the way that the Hong Kong and the Singapore schemes are, kind of grant schemes. But I think at this stage, the way the market participants in Dubai, I mean, again, with the tax situation in the two different regions being quite difficult, it's difficult to give those kind of tax subsidies, etc., to encourage the issuance. But I think outside of that, the market participants are doing everything they can to really facilitate these green issuances.
Thank you very much for that, Lee. Let's sort of change tack now and maybe drill deeper into how these some of these initiatives are starting to shape capital market activity. I think Lee mentioned some of the developments in the Middle East briefly there. Nancy, I'd love to bring you into the conversation actually. How do you see, from a market practitioner point of view, how do you see the trends from where you sit in terms of, what is underpinning the growth in sustainable finance, and what's been the feedback from issuers and borrowers?
Sure, thanks so much, Ali. I will break up my answer into three parts. The first, really diving into a bit of the color on the capital markets, what's really been driving that growth. Secondly, on the key levers that are underpinning this growth that we keep talking about. And thirdly, really what practitioners like myself spend most of our time doing, and it's becoming a key concern in the market. So just to provide that color on the sustainable debt market, so that's bonds and loans, that continues to grow at record growth. The total global sustainable debt market now exceeds 3 trillion, according to Bloomberg. Now, this 3 trillion, in fact, is only a small percentage of the total bond market, so a small single-digit percentage. However, a recent research report actually shows that in the month of June alone, greater than 17% of all bonds issued were labeled as green, social, or sustainable. So that is very telling of what you're seeing through in terms of volumes and the deals being printed. Now, bonds in particular, Lee has mentioned a number of transactions. Bond transactions really have dominated sustainable finance. Overall, bonds contribute up to 74% of total activity, compared to 26% in the loan format. And by comparison, the market was actually quite split evenly in 2019. So not too long ago, it was about 60% bonds and 40% loans. In particular, COVID-19, with COVID-19, we saw social bonds explode in popularity as issuers and investors really get behind directing money towards pandemic relief activities. And so far in the first half, we've seen that continue. Green bonds structurally remain the largest, single largest format of labeled sustainable debt, and to roar back this year in full force. In fact, 75% of sustainable debt issuance in Hong Kong is green bonds for the first half. Now, what's interesting, and the star product or the fastest growing segment of this market is sustainability linked loans and bonds, where different to what we talked about earlier, the green, social and sustainable formats, borrowers are actually free to use the use of proceeds for general corporate purposes. So it's not restricted around green or social. In fact, they then incentivized to improve ESG performance through margin coupon mechanics. And this product is continuing to grow. So just to give you a flavor, in the sustainability linked loan market, the first half issuance already exceeded the full year of last year. And in the sustainability linked bond issuance, the first half is already more than doubled full year 2020. So what is driving that growth? We're seeing from an issuer perspective, it is really sustainable debt, or this labeled debt that we talk about, is a platform to communicate corporate and sustainability strategy. And that's becoming more and more important for investors. It is also an avenue to diversify funding sources. And in fact, for higher emitting customers or customers with more ESG focus, it's really become an issue of access to capital. From an investor point of view, you're seeing that continued investor focus and community focus on sustainable development. ESG integration being mainstream means we have more, nuanced approaches to ESG investing. Negative screening is very common, and now there are restrictions and thresholds becoming more stringent regarding sensitive sectors and controversies. And again, what Stephen's shared around that growing regulation, the increase for transparency and disclosure is absolutely underpinning this. I just want to touch lastly on something that we spend a lot of time on, which is this growing concern in the market for lack of ambition or lack of standardization. And this really speaks to, in particular, the sustainability linked products, where KPIs underpinning the products are sometimes questioned for their lack of materiality, lack of being core and relevant to the actual borrower, or in fact that predetermined targets which are embedded into these instruments are not ambitious enough. So the key point here is that there are industry guidelines, the sustainability linked loan principles and the equivalent in the bonds market have been updated to ensure that the industry best practices are adhered to, and banks like ourselves spend a lot of time to ensure that that is communicated really clearly to the customers that we serve. And again, both Jay and Stephen shared around what Hong Kong is doing around the grant scheme and what Hong Kong has done in establishing the HKQAA, that quality assurance. We've seen that in the principles, the requirement for external verification of sustainability performance as a mandatory requirement, and it's something that goes directly to address this concern for lack of ambition or greenwashing, and it's something that we absolutely require in our own product that we write, but also something we believe really important for the market to continue to grow. I'll leave it at that. Thanks.
Very good. Thank you very much, Nancy. Jay, do you want to pick up the points around product development, excuse me, trends that you're seeing?
Sure, yeah. I think Nancy covered many aspects of how the market has been developing, but some of the other points that I can highlight to the audience is, yes, we have seen other products developments as well. For example, as Nancy touched on, the green bonds has been a mere key products of ESG, particularly green financing, for many years. But now we are seeing more products on, as Nancy said, sustainability linked products, sustainability linked bonds, sustainability linked loans as well. And then I guess the reason why these products are sort of growing fast is they give issuers and borrowers more flexibility on how they can use proceeds. Because as you understand, if we do green bonds or green loans, the proceeds of bonds and loans should be only used for green projects. So how you can use the proceeds should be sort of limited. However, if you do sustainability linked bonds or loans, then as you have to follow the KPI. However, there is no sort of theoretical limitation on how you can use proceeds. So these products are getting more popular, as Nancy gave us some numbers, data as well. And also we see more activities on, for example, sustainable securitizations, but also we see more activities on sustainability linked derivatives as well, although I'm not a derivatives lawyer, but that's what I hear from my colleagues who are doing derivatives products, and they see more sustainability linked derivatives as well, but also sustainability linked structured products as well. So looks like, sustainability and ESG are expanding to cover much broader spectrum of different capital markets products.
Very good, very good. So if I can ask Lee, DIFC has certainly become a hub for Sukuk issuance. Are there any parallels that can be drawn with green finance from a market development perspective?
Yeah, well, Ali, I think you're being modest. I think, unsurprisingly, the DIFC is also becoming a hub for green Sukuks. Obviously we had Majid Al Futtaim, government of Indonesia, ISDB all list their green Sukuk on Nasdaq Dubai as well, which is obviously good to see. Look, in terms of parallels, you can definitely see parallels between the growth of the Sukuk market and the growth of the market for green and sustainable instruments. I think if we were doing this webinar a few years ago, I would say that green bonds were, very much following the same trajectory as Sukuk, which obviously had a head start. Trickle of issuances initially, then kind of a flood of issuances as the sovereigns opened up the market and more corporates and FIs started to issue. However, I think the green bond market has grown so fast and there's been so much demand for it globally that it's now outpaced the Sukuk market. I think what we're perhaps not seeing and what's perhaps slightly behind the curve is the market for green Sharia compliant instruments developing as fast. Although it does feel, as with mentioning some of the Sukuks earlier, like this is coming. I think the green, it's just that the green finance and sustainable finance wave is there. I just think the Sukuk market needs to do a slightly better job of riding that wave.
Excellent, thank you very much, Lee. Stephen, I think Nancy was mentioning some of the the guidance and the work of the regulators there in Hong Kong and the other bodies. I mean, what do you see as the main achievements in Hong Kong in terms of nurturing, the development of green finance?
Yeah, aside from the market growth that we discussed, aside from some of the regulatory innovations and the government-led initiatives that we discussed, I think we can think about it from couple perspective. One is from the infrastructure perspective. I mean, the government is working together with some of the industry groups to try to come up with better, as Nancy mentioned, sort of the guidance or assessment tools or data systems. I think that's sort of one of the key infrastructures that need to be built. It's not there really yet, but it's sort of on the radar screen. And I mean, also, I think people realize the need to sort of invest into the taxonomies, in sort of participating in the harmonization of the China and EU sort of taxonomies. And then hopefully, I mean, Hong Kong is sort of a pretty prime area to do that. And thirdly, I would say that Hong Kong, I think one of the things about green finance is that it needs to be linked and based in the real economy. And so when you see some of the initiative by the Hong Kong Quality Assurance agency that I mentioned, they have this program called Green Loan E-Assessment Platform, where they linked up the sort of Bank of China, Hong Kong with some of the SMEs during sort of the green finance loan application. So to sort of, and also you see some of the initiatives from, for example, construction industry to come up with sort of green constructions certification so that they can have easy access to green finance as well. So, and lastly, I wanted to mention that obviously some of these regulators in Hong Kong have, for example, Hong Kong MA has signed the UN PRI in 2019, and SFC as the vice chair of the Sustainability Task Force of the IOSCO, they are obviously pushing that on a local and international level. And lastly, Hong Kong Stock Exchange also joined the UN Sustainable Stock Exchange Initiative. And I think in the future, what is interesting is obviously the green finance in the context of the Greater Bay Area as well, because as I mentioned, Hong Kong is an international financial center, but from the capital flow perspective, you'll be more connected, not in addition to what is already through the Stock Connect to the Greater Bay Area. And also, hopefully there are projects that we're looking at to connect the green finance initiatives in Hong Kong, as well as some of the real economy projects within the Greater Bay Area region.
Excellent. Thanks very much, Stephen. Nancy, I just wanted to come back to you. When we were talking about the capital markets development, I think you've seen some particular sort of product initiatives around trade finance, which is which is an area that's obviously very important for both Hong Kong and Dubai as global commercial hubs. So do you want to mention that side of things? Maybe you did before. I may have missed it, but just in case.
Sure, I do have a key point to make here. And I think the way we want to think about this is also actually how a lot of corporate leaders and a lot of financial institution leaders think about this, is really taking an integrated approach to sustainability. Certainly the banks, the leading banks in this space are taking an integrated approach to sustainable finance products. Now, ANZ, I can share, has pledged to fund or facilitate $50 billion in sustainable solutions by 2025, and banks all around the world have made similar pledges. And the key thing here is that these pledges, these solutions don't just include the bonds and loans we've spoken about, but it's also the trade finance facilities, it's the guarantees, letter of credits, the deposits, as well as sustainable supply chain finance and sustainability linked derivatives. So it's really about greening right across the portfolio that we are seeing, and that's taking an integrated approach, embedding the sustainability principles in all the banking practices that we do. Now, from a borrower perspective, why would they want to do that? The green and sustainability linked overlay is really an important way to communicate their commitment across their treasury functions. So for example, if they've done a green bond, it's quite a natural progression to think about a green guarantee or green loan or green deposit to support the sustainability strategy or the green strategy they've already taken. Well, what I'll add is that ANZ takes a very disciplined approach to building these products. Where the loans and bond markets are guided by industry principles, by the ICMA, the loan market associations, similar industries, similar products, guidelines have not been created in these newer products. So what we have to do as bankers is really think about how to apply the existing principles that exist in bonds and loans to these new products. And what I will say is that's absolutely not straightforward. I am learning about products that I've never really had experience with. it's a fantastic experience, but it's also not as straightforward as the bonds and loans market. So very exciting. ANZ's launched a number of new products in this space, but we're doing it in a disciplined approach.
Excellent. Thank you very much for sharing those remarks, Nancy. Now, so we've sort of looked at the issuer and the borrower perspective. Now let's pivot towards the investors' perspective. Certainly that's a very important area, of course, that there has to be meaning, and it needs to be productive. So, I mean, let's take a look at the impact specifically on private wealth clients in Hong Kong and Dubai. And if I can, pose a question to Lee. I mean, obviously the Middle East is home to, yes, significant sovereign wealth, but actually just as importantly, private wealth pools. So what do you think, Lee, can be done to raise investor awareness in the Middle East, and really get that sort of attraction to an understanding of green finance-based investments?
Yeah, well, I mean, as I mentioned, I think a lot is already being done, particularly here in Dubai and in the DIFC. I think what I'd probably like to see is more Sharia compliant green and sustainable instruments to get those local regional investors more familiar with the instruments, give them more choice in terms of their investments, because I think that's going to be incredibly important. And then looking at the market further afield when you're looking at raising capital for the Middle East clients, I think what I'd probably like to see is more regional sovereigns come into the market, establishing the pricing curve, growing liquidity, really opening up that market for regional issuances, I think particularly on the Islamic finance side, and leading the way. I think, perhaps getting some of the green investors in Europe, in the US, familiar with Sharia compliant instruments, and to cook with the kind of sovereign credit as a backing, before they then start looking at, some of the corporates, some of their FIs operating in that space in the Middle East. So I think that would really help open up the general green finance market in the Middle East and benefit everyone, including the Middle East private wealth clients. We have started to see this, with the green bonds from Egypt, for example, but it'd be good to see more regional sovereigns issues to cook in this manner.
Very good. Thank you very much, Lee. So, Stephen, I mean, in terms of the developments that you've seen in Hong Kong, how have you seen wealth managers respond to the developments in green finance? I mean, interesting for me, and this is actually all panelists can touch upon it. Is there a return premium, or is it a return sacrifice? But anyway, Stephen, over to you.
Well, before addressing to that question, it's let me just say that I think it's from an asset owner perspective. I think it's clearly there are more based on the CFA survey. There are more asset owner that are interested in the ESG or green finance investing. And from a fund manager perspective, I think SFC in Hong Kong has recently done a survey that over 83% of the companies surveyed, i.e. the asset managers are surveyed, consider at least one ESG factor in their investment. But obviously right now the pickup rate is not extremely high. It's about 35% of the surveyed asset managers systemically integrate ESG factors in their investment and risk management process. So it's picking up, but it's obviously it probably will happen gradually. But there are regulatory changes as well. Last year, SFC had proposed a new code of conduct for fund managers to disclose the climate risk according to TCFD, and this year, just in June, they issued a circular to provide further guidance on sort of the ESG and sort of the key investment factors. So there are regulatory changes, and obviously the asset owners are changing. And so I think the asset managers, therefore, will change accordingly.
Very good, Stephen. And do you have a view on the return profile?
Well, look, I mean, we have obviously looked at various academic literature. And so it's some pointed to, right, some return, but it's for me, frankly, we have seen numbers on both sides. But one thing though, that is relatively clear is that the better the ESG score is, generally there is less downside risk. So it may not necessarily promise a exceeding return on a consistent basis. We still, the numbers are still out there, the jury is still out there, but I mean generally companies have seen better operational procedure to guard against downside risk. Well, obviously that makes sense because that's what ESG is sort of the risk, downside risk protection, and that sort of will offer something to the investors.
That's really interesting, Stephen. Yeah, very good observation. So, Jay, I mean, just from your perspective, how are you seeing private wealth in Hong Kong? Responding to the green finance and its developments.
Sure. Yeah. I mean, I guess it's quite similar to what Stefan mentioned in his prior sort of conversation. So I'm not facing wealth management clients as a banker, but we hear from our wealth management banking clients, and then they see more interest from their end customers on green and ESG products. And then, so they are trying to make more ESG and green finance oriented products available to their end customers as well. And then, so somehow, so touching on what Stefan said, that whether there could be any premium from the investor's point of view. What we hear from our sort of banking wealth management clients is that some wealth management clients, which are rich people and also sort of super rich people, similar view that the Stefan gave us, which is basically maybe in the short term, whoever is better in ESG compliance may not be doing as good as other companies. However, if you look at the long-term perspectives, some wealth management clients still think that those companies can do better even in their financials in the long term, because they manage their carbon neutral sense better. They can manage their companies in governance perspectives better and other things as well. So sort of that's the perception that not all of them, but some of the wealth management clients show to our banking wealth management clients. So it's a similar consensus to what Stefan said in his conversation. Thank you. Yeah.
Very good, very good. Thank you, Jay. And Nancy, if I can pull you back in and just get your intuitive feel around returns. I think that's an interesting area.
Yeah, super interesting. And I think I might have read the similar reports to Stephen around the potential for a greenium from a corporate issuer perspective when they issue a green bond, which to be honest, at best is about 1 to 2 bips. So it's really not a return story. I would say that with the rise in sustainability-linked bonds, which are structured to have a coupon step up, if the issuer does not perform or hit the target, that obviously is an extra remuneration to the investor. But on the wealth management side, I think it's interesting to note, as the speakers said, that integration of ESG from an investor perspective is absolutely happening right across the financial institution customers that we service, as well as this growth in impact and community investing. So that's really the next step. You know, it's not just about integrating ESG into your investment processes, but also, but really going that step further, targeting investments that are aimed at solving social or environmental problems. And really, we're at a stage where impact investing is able to deliver both that positive impact and returns. So it's very exciting, and we're seeing groups, you know, family offices and wealth management firms here taking that additional interest and in fact adding headcount for impact investing and ESG investing generally. So I think watch this space.
Very good. And just to remind the audience that we're drawing to the conclusion of this panel, but if you do have any questions that you would like to raise for the panel, you know, please utilize the chat box, and we will look to answer those. So, I mean, just as a wrap up, I mean, I think that you know, we've covered some really interesting areas. There is obviously lots going on in both regions. It'll be really cool, you know, to explore further, you know, how we can collaborate. I think, you know, one of the areas, and maybe Stephen, you want to sort of jump in on this as well. I think the UN has a financial center for sustainability kind of working group. And, you know, we're very much looking to be part of that to drive the agenda around that as well. But I mean, if I can ask the panelists, you know, for a couple of pithy comments in terms of their overall sense of where we are with green finance. I mean, is it a passing fad, or is it here to stay? I mean, what's your gut feel about it? Who'd like to kick off?
Well, it's certainly here to stay, and especially in Hong Kong, given the commitment from China to the overall sort of climate zero by 2060. And so these are obviously very serious commitment, and therefore there's huge financing to be done. And but obviously there are a lot of obstacles to, you know, integrate the climate studies or environmental science into finance practitioners' day-to-day language, with the assessment tools, with the data systems, and taxonomies, and all these are not obviously can be done overnight. But I do think there are lots of room to grow as the market matures.
Very good. Thank you very much, Stephen.
Yeah, I mean, like I'll let Nancy from ANZ speak on a kind of investor perspective, but look, I'm personally very bullish on the green market. I think, you know, while we've seen some incredible growth over the last few years, I think looking back on this will be the time when actually green finance is still in its infancy. I think we're going to see, you know, personally, I can see a time in, you know, 10, 15, 20 years where actually all finance is almost done in a green, you know, for green kind of sustainable purpose. And actually, you kind of, if you're not compliant with certain green requirements, you're actually going to get penalized from a financing perspective. That's, in my personal view, the way I see the market could potentially go, given the explosion we've seen over the last 10 years.
Thanks, Lee. Nancy, Jay, final comment?
Ali, I think somehow I sort of tend to share with what Lee said. I don't want to say the word bullish, but I'm more, I want to say very positive. Because I mean, looking at the history of how the green bonds, for example, evolved over the years, I recall that I gave a presentation maybe 7 years ago when green bonds tried to pick up the speed. And then back then, maybe they were only green bonds, but now we had only 7 years, 8 years, but now we have, as Nancy correctly described, we have a sustainable linked bonds, but also loans and also social bonds or other, now it's expanding to cover ESG, not, you know, green financing. So over the years, the market has been expanding to pick up other socially important topics to put them into sort of financing areas. So even in the future, we are expecting to see similar, pattern of growth, and then maybe expanding into different markets as well. That's my 2 cents. Thank you.
Very good. Thank you, Jay. And Nancy, please.
Yeah, sure. I think I absolutely agree with this comment that this is really the start. This is the beginning or the tip of the iceberg. And if we just think about green, for example, a lot of the transactions and whether you look at sustainability linked loans or bonds, 80% or something like 70 to 80% of the KPIs, the key performance indicators, are environmental and in particular pertaining to greenhouse gas emissions reduction. And that's been guided by the, the global alignment to reach to align with the Paris Agreement of limiting temperature rise. And that's been one single goal, and it's been very effective in guiding nations, corporates to get there. But again, that's really one part of all of environmental, which is much larger than just greenhouse gas emissions, although there is a lot of interconnectedness with nature. For example, we saw the launch of the Task Force for Nature-Related Financial Disclosures Working Group just in June. So that is similar to the cousin in TCFD. In 2 years' time, that framework will come out and really be guiding corporate disclosure and also help us bankers and financiers to think about product solutions. And we've actually seen this year in the transactions moving away from just the environmental. Here in Asia, investors started questioning around the social and the governance aspects of transactions, where we have, anecdotally 1 or 2 key performance indicators dedicated to greenhouse gas emissions or renewable energy. Investors have asked, what about the social, and what about board diversity? And those questions, we're not seeing in capital market transactions years ago, but it's all coming through, and it's absolutely here in Asia as well. So I think this is very much the start. And again, anecdotally, you can see by the number of job ads that's been posted around green ESG investing. I think the financial markets recognize that we don't have the majority of the bankers don't have that capability to support the infrastructure, the customers around the appropriate structuring of these products. So we're absolutely adding to that capacity, and that will be key. So that kind of job growth, it has really exploded in the last few months here in Hong Kong. So very excited to see, to be part of this growth in Hong Kong, and hopefully share some of these with the rest of the audience in time to come.
Very good. Thank you very much, Nancy. So I think we're sort of approaching the end of this panel. I think, picking up on the panelists' comments, it's not the end, but the beginning, or the end of the beginning, or something like that, right? I think that absolutely there is, everyone can sense it, great commitment from, governments and supranational bodies to push through on this, and I think that will inevitably permeate down into the financial markets. And I'm sure that we have the capable market practitioners and lawyers to structure great products that are beneficial for the pursuits that we've touched upon, but at the same time, provide a decent investment and decent solution to market needs. So I will wrap things up there. I will just suffice to thank all the panelists, Stephen, Jay, Nancy and Lee, to very much thank Hong Kong Green Finance Association and Simmons and Simmons for this collaboration. And thank you for everyone that's joined this webinar. I'm sure that there will be a recording available, and that we will all be available, and our contact details will be available if you would like to touch base with us after this event. So thank you very much, everyone, for joining, and have a great day.
Thank you very much for everyone. Thank you.
Thank you.
Everyone.
Bye-bye.
Bye.